So what are some of the pros of funded trading and why are people so attracted to it? Well, getting someone else's capital to trade with. Whenever I'm in the city and I'll speak to brokers, I'll speak to people and people who are trading on an institutional basis and like, well, why are you trading your own capital? And it's sort of an alien concept to these people who are trading really big money, the big whales who we're trading against and also trading alongside is why would you trade with your own capital? You should be trading with people's capital. And it sort of makes sense in that respect. It's also quite low cost to get started. You know, if you've got the trading skills, you've got the abilities, you can front a relatively small fee and potentially access quite large amounts of capital because there's no end of people who are willing to give capital to talented traders. You know, a lot of people do worry if they have small trading accounts and they'll come to me and they'll say, well, you know, I've only got $1,000 or similar equivalent amounts in different currencies. How am I ever going to access large sums of capital? And I always say, well, if you can develop the right skills, if you can be consistently profitable, then you're in a position where you can leverage that skill set. So, you know, I always say to people, look, don't worry, just think about the process, think about the skill set that's required in order to trade, and then the capital can come a little bit later. And you don't pay for the losses as well, which is good. So, you know, the person who's funding the capital is taking the risk on as well in exchange for the potential upside they take on the downside, which is nice. So you get a fixed capital fee. You're not going to find yourself making some egregious trading error or trading over a weekend and finding the market limits down or limits up or something crazy and chaotic like that. Usually use a Ninja license key for it as well, which is ideal as well. And you get the accountability as well. And that ties into why I do this. Question is, why do you run a fund? Why do you run a trade room? Why are you talking to me tonight? Because there are times where it can be a pain. And the reason is accountability. You think about an institutional, if you're trading at a large firm, prop firm, bank or something like that, you've got that accountability and that infrastructure to make sure that you're behaving with someone's capital. Whereas, and I speak from experience, I'm sure many of you do, when you're trading on your own trading account, then things can get a little bit wild because you can do all sorts of mental gymnastics and justification with yourself that we need to be worrying about as well. But of course, there's two sides to everything, and there's cons of funded trading. Well, the trailing drawdown, you need to be aware of that. Most of these funded providers do provide trading drawdown, so they'll say you've got a large account, but you need to keep an eye on that to make sure that you don't hit it. You know, you've got to be, if you're given 8 contracts, you don't need to be trading 8 contracts. For example, trade that on the NQ, you're going to find yourself in a spot of bother pretty quickly, as I'm sure many of you experienced. You can rush and force trades. Sometimes it's marketed as, you know, passing as little as 10 days or 15 days. That's not necessarily a target. That's just the minimum. So you want to try and disregard that. There's no rush. You know, the market's going to be here the day after tomorrow and the day after that and the day after that. So there's no rush. Some of the rules are quite stringent, some more than others. Some won't allow you to hold over certain news events. Some won't allow, most won't allow you to hold overnight. So if you're a swing trader, you might struggle unless you pick a specific swing trading provider. They don't want to hold over weekend. And that makes sense from their point of view. They don't want to be holding risk when the market's closed, either on a daily basis or over the weekend. They're not interested. And you can over leverage, like I say, just because you're given X amount of contracts doesn't mean you need to use X amount of contracts. You don't need to trade many contracts on the futures market for the returns and the potential losses to be quite large. So we need to be a little bit cautious about that.